And we're live, broadcasting only on onedealaway.com/live. My name is Nev, this is Money Matters, and today we do have an episode. Well, we have an episode every single day, but today is an interesting episode because we're going to look at some of the news that, are affecting us. Like, what's going on with some of the giant tech companies? Where, are the money things going? What's going on with Google? Hey, there's something that happened with Google, and the U.S. Justice Department basically is filing antitrust lawsuit against Google. What does that mean? Well, they're going to look to break them down. What does that mean for the stock? Well, it does have a potential to potentially crash. But that's not all. We do have additional news about Netflix, as you know, that their subscription is down, stock is down. We're going to take a look into that a little bit. Then we're going to be looking at Warren Buffett. So Berkshire Hathaway, potentially because of the news, the stock could go down. Again, my crystal ball broke years ago. I don't know what's going on. Not a financial advice, and you should never listen to anything I say. But I'm going to take a look at sort of what happened yesterday a little bit with the stock market, kind of where things went, where we could expect things to go today. And then we're going to be looking at some of the bankruptcy stuff and what the companies are doing, particularly AMC Theater. And I think you're going to be maybe shocked, maybe surprised. I certainly wasn't, because it's definitely the sign of times. But I did appreciate their honesty and transparency, and that was cool piece. And so I want to point that out. And then, of course, we're going to take a look at the J.C. Penney. As you know, they filed for bankruptcy, and there's development happening with J.C. Penney. And this is incredibly important for you. If you have a pension plan, if you have a retirement plan, if you believe that you are going to be supported by the company where you work on, you definitely want to listen to JC Penney story, not JP Penny, JC Penney story, because that could be the piece that is working for you. And then we're going to end it with the most exciting, most sexiest news and information ever. The good news. Of course, we always want to end with the good news, and the good news is crypto. And of course, we do have some excellent and amazing news when it comes to Bitcoin. If you haven't been paying attention to what's going on over there, haven't been paying attention to the adoption, to the prices, any of that stuff, well, you definitely want to stay tuned in today so you get caught up. All right, y'all, let's do this. And good morning, good morning, good morning. Happy, I was going to say Tuesday, but it's Wednesday. It's Wednesday. How did it's Wednesday already? I mean, seriously, y'all. Seriously, I mean, Halloween is right around the corner. It's next weekend, actually, right? And then after that, it's the crazy elections, which, that's scary. And right after that, well, it's Thanksgiving and New Year's. I mean, before you know it, it's going to be New Year's. And so it's exciting times. It's exciting times. But let's not waste time. I know you got places to go, people to see, things to do, and money to make. So Dow Jones futures signal modest losses on stimulus news. Netflix dives while Snap rockets 24% on earnings. So Dow Jones futures were lower along with S&P 500 and Nasdaq 100 futures. This is as of this morning, right? And of course, Netflix is went down 7%, and Snap went up 24%. Now, what is going on with this stuff? Why is this all happening? Where are we with this stuff? And they're saying, we're taking stimulus news. And it's been very interesting because what I have noticed the pattern is that every time after hours, the futures market tends to be a bit more bullish than the not so future market. It goes up. I mean, we saw it Monday. It was like very, very bullish. You go into the Monday to open on up, and it just went, right? And then Tuesday, it was sort of like, kind of, uppish. I mean, we're looking at like 0.01% or whatever. So I don't know that that's much of a movement. I mean, that's a flat market as far as I'm concerned. But then again, maybe my expectation for what is flat and what is not are a little bit different than those in the market because I don't live in this space 24/7. Like the returns that I look at and follow, have to do with with crypto, and crypto tends to move, can have sometimes like a 40% day. Like that's a move. When you look at real estate, for example, the appreciation, depreciation, cash flow, and everything else, your return on investment could be anywhere between 25 to 45% on the lower end of the scale. Never mind the 5 to 10x that sometimes you can get when you flip places and you buy them properly, of course. So looking at something that has a few percentage points, like it just skews things for me. So my apologies for that. But what happened is that Netflix of all people, of all places, of all things, well, the subscription started to go down. Well, of course it's going to go down. Why? Because when the pandemic happened, right, we all sort of got locked up, and people are like, what do I do? So it's like, might as well Netflix everything, right? So we saw a huge surge of everybody going over there. Well, since then things have laxed a little bit. We've been allowed to go outside and go eat places and do stuff, right? And so of course it makes sense that you would sort of like pause on that, and maybe some people are like, you know what, we have all these expenses, the income is not coming in, that $600 that I was depending on from the government, it's not coming in, I got to start making cuts. And so I'm not going to cut on the food or the shelter, right? Although people might, right, like reduce the overhead. But you look at subscription, you're like, I don't need that magazine, I don't need the gym, I don't need Netflix, right? So we get rid of stuff. And by the way, you don't need Netflix. There are free ways to actually stream stuff. Pluto TV. I'm not an investor. I don't get any money from it. I have no connection with them. I just, it's just a way to do it. YouTube is amazing, okay, so maybe you can't watch the movies and stuff, but although I'm sure you could probably find some. But, you know, I mean, you can get all the news, so you don't need cable. You don't need cable. And the crazy part is, cable is moving to YouTube. Like that's the part that is super crazy to me. So, anyways, and I will show you the proof in a moment. So that's kind of what's happening. But they were, we have this expectation as human beings. We have this sort of like really weird expectation. Let me see if we can draw the weird expectation. When we see that something goes this way, right? That kind of goes this way, we believe that that is the direction that it's going to go for forever. But in reality, if we're being completely honest, we do know that what goes up must come down, right? Now the goal is that it's going to go up, slightly down, and then go up and slightly down, right? So that your highs are going to be lower. Sorry, that your lows are going to be lower and your highs are going to be equally as lower, because when you have that, well, that's when you have a bull market, right? So anyways, that's what the goal is, that's what the desire is of what we're looking for. So that's basically what happened, and Netflix has reported a dramatic slowdown in new subscribers, widely missing earning expectations, sending shares on a plunge in after hours trading. So that's kind of what has transpired, and that's what triggered this whole thing. But don't we, for Netflix, they're doing just fine-ish, right? I mean, they're okay, but they came up with a new idea, and here is it's a testing of the new service, and it's going to give, basically, you get Netflix for free for the weekend, and the goal is that people get to try it out, and of course you then stay with it, right? So they are going to get this promotion that everybody in a given country will basically have an access for free for a weekend, for 2 days. And the first launch is a test in India, of all places, and it's going to be 48-hour promo, basically over there, to see what happens. Now this move, of course, comes after Netflix ended the 30-day trial in the US. So if you know anything about it, they used to have this 30-day free trial in United States. And go ahead and sign up, for a month, you get to use it, and then after that you either had to pay or leave. And that is no longer working. I mean, I don't know that it's not working, but they no longer have it. They no longer have that piece. So what they're doing, they're talking about that they're going to try to do something new. So there's going to be a different promotion coming for US. However, they didn't necessarily talk about it in this, and they're kind of keeping it hush hush on the whole component. The other piece that I think also probably has hurt Netflix a little bit is when they decided to kind of increase the costs and stuff way back when. We did see that I think folks are getting used to sort of low cost or free, and so when there's increasing costs and increase on for folks without anything additional, folks tend to kind of walk away from it. So we'll see what this is going to look like. I mean, I don't think that Netflix is going to go down for forever, but I also do believe that stock market does have a very strong potential to go down. People say crash, but I don't know if it's like crash, although that is possible. But then again, don't listen to me uh, uh, for any of this stuff because I've been wrong before. I mean, when March hit, I did say we're going to crash. My expectation was going to be about 40 to 50%. We missed that mark. I'm not sad about it. I'm actually glad that we didn't hit it because that would the 30 some almost 40% was painful enough. Since then, we have definitely climbed and just kind of like went on even higher. But I do believe that the next leg is going to be more likely than not again 50 to 80% from the highest high. So not from the February March high, but from like the recent October high. Uh, just because things are lined up really funky and many people are talking about it. So we'll see. Again, I hope I'm wrong, which would be quite lovely. And but I also do know reality that like things can't pump for forever. And I think that there's a lot of uncertainty that is coming and is going to continue to come between the pandemic, between the elections, between what the elections are going to bring with our relationships with the foreign nations and that kind of stuff. So a lot of stuff that is uncertain. But anyways, that's just kind of where I feel in the whole thing. Now, now it's time to go and switch over and start talking about something intelligent. Mm. And the intelligent thing is Berkshire Hathaway. So there it is, our friend Warren, and he has to pay $4.1 million fine for Iran sale. So what happened? Warren Buffett's company had agreed to pay $4.1 million fine because of its subsidiaries improperly sold equipment that was destined for Iran in violation of U.S. sanctions. What happened? Well, they announced a settlement with the Berkshire Hathaway on Tuesday, so yesterday, and this is regarding the $383,443 worth of cutting tools and other equipment that Berkshire's Iskar subsidiary sold to Turkish distributor between 2012 and 2016. But what happened is that this Turkish distributor then went and kind of hit things around and then passed it on to Iran, thus violating the U.S. sanctions. So Berkshire reported the improper sales to the Treasury Department in 2016, right after receiving a tip about them. So one of the things that is in it's the sad news of the day, I guess. Again, I think 4.1 million for Berkshire is basically nothing. It's like a $400 fine for a regular human being. But the sad part is that Berkshire didn't do anything wrong, right? Buffett didn't do anything wrong. They followed things. They thought they were doing business with the person A versus person B. The moment they found out, they raised the flag and were like, whoa, 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 whoa. And nonetheless, they're being fined, which I think is ridiculous. Because you have these companies, and here's my take on it. I don't know, agree, disagree. I'm not like in love with Warren or anything like that. I don't agree with everything he does, but you have something like J.P. Morgan Chase, that lies, cheats, steals all the time. They knowingly hide things under behind the scenes, under the rug, and do deals under the table all the time, right? And then only when they get caught do they sort of sign this agreement of like, well, we didn't do anything wrong, and then they kind of settle for some sort of small amount, and then they rinse and repeat the process. Different names are involved, different deals are involved, different country could be involved, but they keep on doing the same thing, right? then you have somebody like Buffett and Berkshire Hathaway who was trying to do the legit thing, realized that, hey, wait a minute, time out. We got news that this is not as legit as we thought it was going to be. Reached out to the government, said, hey, we got to report this stuff. We got to deal with this stuff. Help us out, blah, blah, blah. And they were like, yeah, you still got to pay the fine. It's your responsibility. Well, what does that teach me, right? Like, let's go back to the sort of a young brain that is influenced by sort of learning on the behavior and watching what's happening ahead of them, right? Let's pretend that we are children sitting here and watching. Well, what that's teaching me is that, if you do something illegal, shut up, and then when you get caught, and then you sign things, and then you pay the fine. But don't, it knowingly or unknowingly, right? Because there is no reward here for them saying, hey, like, we caught it, we're gonna talk about this stuff. So there was absolutely no reward to it, and that's in my humble opinion, wrong way to do business, because you're not encouraging individuals and companies to raise their hand and say, hey, we're realizing that our subsidiaries are doing something wrong, help us out, we're trying to resolve this stuff. No, you get equally as punished, equally as fined. And to me, I think that that's absolutely ridiculous. And so I don't know, I'm not crazy about that. Let me know how you feel about it. Let me know what you think about the whole thing. But there's like, doing that stuff, like, what is my incentive to come in and report? What is my incentive to come work with you? Because whether I work with you or not, I'm going to be in trouble. So I might as well have a good time until you get caught up with me, right? So let me know what you think, but that's kind of what I feel about the whole thing and where I think. Now, speaking of giant companies doing the right thing, doing the wrong thing, I don't know how I feel about this one. Is it the right thing? Is it not the right thing? Again, you let me know in the chat. You let me know in the comment section of what you think and how you feel. And speaking of the chat and comment section, I forgot to do this yet again. I do want to welcome everybody watching this live on onedealaway.com/live. Sign in, say hello, and we're going to do a Q&A at the end of the show as always. If you're watching this elsewhere or listening to it, because I don't know, maybe you're just listening to the audio. You're not even watching any of this stuff, which is perfectly fine. Hey, do me a favor. Tell others about it. Smash the like button if there is a like button to smash. Forward it if there is a forward button. Subscribe if there's a subscribe thing. And if there's some sort of way to get notified, like bell button on YouTube channel, then smash it. You get notified that, hey, new thing is coming in. But only do it if you are enjoying the show and if you are liking the information that we're sharing over here. All right. Google. U.S. Justice Department files antitrust lawsuits against Google. Let's take a listen.
Blockbuster antitrust lawsuit against Google tonight. The Justice Department accusing the tech giant of being a monopoly gatekeeper for the internet. Google handles nearly 90% of what Americans are searching for on the internet. Here's our Chief Justice correspondent, Pierre Thomas.
The Justice Department declaring war on Google.
Every day, billions of people come here with questions.
Federal prosecutors accusing Google of being a monopoly gatekeeper for the internet, accounting for close to 90% of searches in the country. They claim the tech giant has been engaging in anti-competitive tactics, paying phone manufacturers and tech companies billions to allow Google to be their default search engine. Prosecutors alleging the ties were so deep, a senior Apple official wrote, "Our vision is that we work as if we are one company." According to the complaint, in some cases, even if consumers want to delete Google from their devices, they can't.
Google's conduct is illegal under traditional antitrust principles and must be stopped.
William Barr today calling the lawsuit a monumental case for the Department of Justice and, more importantly, for the American consumer.
David, DOJ is asking a judge to rule that Google violated antitrust laws, and that could lead to the company being broken into smaller pieces. Today, Google responded saying the lawsuit is deeply flawed and would do nothing to help consumers. Google says this would only prop up lower quality search engines. David?
All right, Pierre Thomas.
And there you have it. So this is going to turn into a very interesting case that I think is going to follow very closely. But is it possible that the shares of Google stock are going to drop in the short and potentially even the long term? Yes, absolutely. Now, is that the only reason why it could? Yeah, it's one of the reasons where the price could actually take a dive. But where I could also see the additional piece is just what everything else is happening with all of the other tech companies, not just the antitrust lawsuits that are potentially coming, not just for Google, but for something like Facebook, potentially, Amazon, maybe Apple, I don't know. Um, Anyways, you let me know how you feel about it. I do agree. I think that Google has a large share of the whole thing. But, them saying like, well, if you break it up, this only gives access to the lower level service. Well, at one point, you were a lower level service. The problem is you became so big that you're the only service in town. So we don't know. We don't know if this is going to be lower level or higher level. I think giving people an opportunity and an option is going to be a really, really good thing. And I do like opening the whole thing. I mean, it's, right now we are on YouTube channel, which is basically part of Google, right? It's going to go onto the. Anyways, I have mixed feelings about it. I don't have anything against Google. Well, I have some stuff against Google, right? Like I don't like the fact that they are sort of spying on you even when they're not supposed to, and how they were started and how they're created and all of that stuff. But I also think that there's a lot of brilliant things about Google that I think companies can definitely model of figuring out of how do you do something for free and then monetize it on the other end. I think that that's very, very cool and very good idea. Providing us with the search engine where you can find stuff. I think that's a really nice thing. YouTube, way back when, you had to get the cassette tapes and like that stuff to like store it, and you couldn't do video, and now you can, and you can watch things. So there's a lot of innovation that has kind of transpired from it. I do agree that they're definitely a monopoly, and that removing their monopoly does make sense. Again, you let me know how you feel about it, what you think about it, and now we're going to go into AMC. Now, here is one of the interesting pieces that I think you absolutely must know if you're in the market and if you are thinking of purchasing their stock. And this is the AMC. AMC is the movie theaters in the United States, and they have warned it may have to file for Chapter 11 bankruptcy if it cannot obtain additional sources of liquidity. Let's make this bigger so you can actually see it. So they basically have partnered up with Citigroup and Goldman Sachs to sell up to 50 million in Class A shares, with the proceeds going towards corporate purposes. AMC raised already $54 million last month through a similar agreement with Citigroup and Goldman. In the event, this is what they're saying. So you got to understand this stuff, because this is the part that a lot of people don't understand, that when they see something start to tank and when they say bankruptcy, people are like, yes, and so they jump in. So you need to understand this stuff. We've shared about it. We've talked about it in March, April, May. Maybe I didn't talk about it as much in June, July, August. I probably didn't mention it. I definitely didn't mention it in September, but it is October. We should be all reminded of this thing. In the event the company determines that these sources of liquidity will not be available to it, or will not allow it to meet its obligation as they become due, it would likely seek an in-court or out-of-court restructuring. Holders of the company's common stock would likely suffer a total loss of their investment, AMC said. So here is the piece, right? When you buy a common stock, right, and they have to go in and file for bankruptcy, whether in court, out of court, basically try to restructure the deal so that they can try to like stay alive, so to speak. The bonds have to be paid first, which is why bonds pay a lower rate, but they are much more secure, because the way that the laws are written is that the debts have to be paid first and then the shareholders. Whereas a common holder of the equity of the stock, you are a shareholder and you're not even the privileged one or whatever, right? Like the premium version of it. You are the like back of the bus kind of owner, right? And so by the time, food comes to you, there's none left. Actually, by the time it reaches middle of the bus, there's none left often. Sometimes it doesn't even make it onto the bus of the equity holders, because, it just goes kaboom. So you need to understand this stuff. Now, we will require significant amounts of additional liquidity, and there is substantial doubt about an ability to continue. AMC also it disclosed it had $417.9 million in cash on its balance sheet as of September 30th, down from $508 million cash balance reported as of August 31st. So this is very, very important right over here. Why? Well, because I think it's important for us to understand of what is happening with the money. So they went from 508 to 4, let's call it 418, right? So they basically spend $90 million a month. Okay? So if you know that they're spending $90 million a month, right? How many months do they have left at 400 million? What? 4? 4.5, right? So that could potentially bring them, maybe they could survive till February of 21, right? And even that is a maybe. So I think that that's the reason why they're going out there and raising money. But the problem is that they're raising money through the equity, and they're also telling you, don't buy it. I mean, they're hoping you would, and I know people will, but they're even saying like, you're not, if this doesn't work, if we can't reopen, if the movie companies, the Hollywood stops producing movies, because they have, right? They stop basically putting stuff out there. They stop releasing things to the theaters. Well, guess what? If as a theater, how do you entertain people? What are you going to have them sit there and watch at a blank screen? No, you got to have the movies. Well, if the movie company is not providing them with the movies, then you as the theater, even if you were allowed to have larger groups and people were not afraid and all of that stuff worked, there's nothing for you to show because Hollywood is not releasing it, right? So if Hollywood is not releasing it, you can't get people in it, and if you can't get people in it, well, so there's multiple pieces of the problems kind of here happening, right? So you have to get Hollywood to produce movies, to release movies, for people to feel very comfortable to go into the crowds and sit there for a few hours or sit there with the face mask for a few hours, and I don't know, how do you eat popcorn at that stage, or like have your soda? Right? I guess it doesn't happen. Or do you go there without it? And then, the laws also have to allow for groups of people that are larger than like 5 or 10 or 15 to sit in the same environment. So there's a lot of problems happening for the movie industry, for the theaters, and so I could see them being fine, 12 to 24 to 48 hours, 48 hours, months from now. Do I think that they're going to somehow magically recover in November, December, January, February? No, because while movie watching in winter times when you were like, I'm cold, I don't know what else to do, let me snuggle bug up and watch a good movie, but we end up doing that at home, I guess. You don't want to do it in a pandemic and in the height of the flu and cold season. So it's like, I'm just not gonna do it. So I don't see them being able to succeed in this, but I do wish them best of luck, and it is really, really rough. Shares of AMC Entertainment Holdings declined more than 12% on the news to $3.09 in trading Tuesday. S&P downgraded the company credit rating from CCC plus, right? They were already in the C's, which is bad, to CCC minus, moving them into the junk bond category. I think it would move them into the junk category of the thing. And so it's more likely than not, again, I could be wrong, I hope I'm wrong, but it's more likely than not that AMC will have to file for bankruptcy because, I don't think, they're even raising, right? Like last month they raised 54 million, but their cash went down from 508 to 417. What I don't know is whether this 54 million is part of that component right over here, right? That's the piece that we don't have information, because if that is the case, then they're burning more than 90 million a month. They're burning 140 some million a month, which is a huge amount, right? So additional 15 million, it's not going to do anything. So it's more likely than not, I think, that they will have to file for Chapter 11 bankruptcy, at which point I do expect the shares to go well below $3. It wouldn't surprise me if they go into the pennies and AMC officially turns into penny stock. And then it wouldn't shock me if the Robinhood army then jumps in and buys it all in the hopes that, I don't know, somehow miracle is going to happen and that it's going to continue going up because, as the Barstool guy says, stocks only go up until they don't. Until they don't. Speaking of going up until it doesn't, J.C. Penney's. Well, there is something happening with J.C. Penney's, and as you know, they filed for bankruptcy. They have new owners. You may or may not have known this, and but you know, they're going to buy it. Pension, not so much. That's not gonna happen. Not gonna happen. So let's take a look at what's going on. Mall owners Simon and Brookfield will turn over Penny's fully funded defined pension plan to the PBGC, while other retiree benefits will end. All right, so we got to talk about this over here, right? So you have the defined benefit plan. Let me see if we can get my little handy dandy marker. All right, let's go with this one. Let's go with red. So you have the defined benefit plan. All right, are we going to draw? Defined benefit plan. That's the basically pension plan where you are promised to have, you know, your monthly, you know, paycheck that you're used to of say $5,000, right? And you are basically guaranteed that for life or whatever, right? Whatever the thing. Like that's the pension stuff that very few of us have seen or will continue to see. And I believe that this thing is going to go away. It's going to disappear from everywhere. Many companies way back when used to have this stuff, and that was part of the great benefits where like you would work there for, you know, 40 years, right? And then you would get like a beautiful gold watch, right? And then, you know, they would throw you a big old party, right? Of like, woohoo, you're awesome, right? And then you would retire and collect this like amazing benefit. Well, none of that stuff is true right now. Where most of us are right now is in a place known as defined contribution plan. That's the part where whatever you put in during the life of work of, you know, 40 plus years, right? Plus the interest that you potentially hopefully get because you invested accurately and it goes up, right? And so once you actually get this into the accumulation piece, then you can withdraw your money when you retire. So defined contribution plan is where you only make money when you put money in it. So this is an example of that would be a 401k, right? Where you basically are putting money into the savings. And it's called the retirement savings account. The problem is that it's very risky because it's not savings. Like they call it savings because savings sounds like a thing we should all do, right? Where, you know, savings way back when was you go in and you put in, you know, $100 into the savings account, and then this savings account would give you, you know, 10% interest over the course of a year. And so you kept, you know, putting money in, right? Allowing it to slowly grow up. And then, you know, that 10% kind of kept growing with it. That was the idea of the savings plan. And then somewhere along the ways, the crooks of the Wall Street decided that, you know what, why don't we do this with the investing piece? And so because defined benefits or pension plan is very expensive to the company, right? Because they are the ones who actually have to put money into it for you. They are the ones who have to invest it. They're the ones who actually have to monitor it. And so to them, you know, this is a very large expense. So what they did is they said, well, if we could actually take this thing, right, this giant expense over here, and pass it on to our employee, right, then our employee would basically then have to pay money in, and then if they end up investing 60% of their 60% has a zero nav, 60% of their income into this magical bucket of a sort, the money bucket, and this money bucket also pays them a nice percentage point, then cool, then they can actually withdraw money when they get old, and we are maybe going to support it a little bit. So that is what happened, and so that is where a lot of old companies used to do. That is what a lot of teacher stuff is doing: police, firefighting, schools, primary, secondary, higher ed, um, hospitals, like you name it, they used to do it. That is all going away, and it's going away in droves. And the challenge before this whole thing was that it would go away while you were an employee or before you became an employee. But now JCPenney is teaching us a very important lesson, that it can go away while you're retired. I need you to sit down and let that sink in. It means that your pension can go away when you need it the most. Look, if I'm in my 20s and I just get a job and the job says, well, we did promise you pension, Neb, but that's not going to happen. Cool. I have a lifetime to come up with a plan B, right? Even in my 30s, even in my 40s, even potentially in my 50s, a little bit more challenging, but it is possible. So there's a room, there's a way to kind of be able to do that, because I can go in and start investing more, actively, and come up with the different sources of income, and hustle, and like try all these different things. When I'm retired and I haven't been working and I am 75, right, for example, or 85, and then I get a notice that says, your retirement thing, yeah, you remember that thing? Yeah, well, we're not doing it anymore. Sorry, we went out of business. New company bought it. They didn't want the liability. They will just take the buildings and the cash flow, but they're not taking any liabilities. You are a liability. I don't know what to tell you. Social Security could help. Good luck. So this is an incredibly important lesson. Now, it might be too late for some of the JC Penney employees and retirees. It might be too late if you are in your 60s, 70s, 80s, 90s, right? Definitely too late if you're in your 90s, right? And you're retired and you aren't able to work. But if you are in your teens, 20s, 30s, 40s, 50s, it is time. It is time. It baffles me how many people go and talk about, well, I have a safe, secure job. No, you don't. No, you don't. There's no such thing. There's no such thing. Yeah, you're tenured professor. Guess what? You're tenured today, no tenured tomorrow, because when the school shuts down and liquidates or merges or whatever, you're gone. Oh, but I have, we're so lucky. My husband or my wife, they have, a pension plan, and so we're set for life. No, you're not. No, you're not. I'm sorry to break it down to you, to both you and you and you and everybody. So let's learn of what is going on. JCPenney filed drafts of its sale Tuesday, saying it had made significant progress towards its planned exit from Chapter 11 bankruptcy in late November. New owners will turn over Penney's defined benefit pension plan to the federal program that insures it. Other retiree medical and life benefits were also rejected under the sale agreement. So basically, this move affects more than 52,000 current and future retirees who are vested in the plan. And they're not going to get any of that stuff. I mean, okay, they're going to get a little bit of it, but the hearing says they had a lucrative retirement benefits, and most of the companies used to have that, right? I worked at a company, I worked with the company, sat on the board when we were restructuring their benefit, right? We were restructuring the whole thing. It was all going away. It was all going away because the liability was so huge. The company would have gone into the J.C. Penney mode, aka Chapter 11. They can't afford it. This is not a J.C. Penney problem. This is a problem, right? This is worldwide, everywhere problem. And if this is not happening in a country where you are, I guarantee you it's coming, right? I grew up in Serbia. Many of you know that, many of you don't. Relevant, irrelevant. It wasn't relevant until today. It's relevant today because, when I started working here in the United States, and my mom was always harping on me of getting into the pension. Are you vested into the pension? Are you vested into the pension? Are you vested into the pension? I'm like, there is no such thing as pension. It doesn't exist here. It doesn't exist here. It exists. It's just few and far in between. But where I was getting jobs, where I was working, it didn't exist. It was 401ks, right? 403bs, 40 whatever's, things. IRAs, that kind of stuff where you put in money, and whatever you put in and however well or not so well you invest, that's what you get. That's what you get at the end of the whole thing when you get old and decrepit and you no longer can work, right? So that's why it's important that we do that right now while we can, while we're alive, while we're healthy, while we're doing well. We got to do this stuff. We cannot rely on other things, and not relying on companies, definitely not the government, because Lord knows they will just take advantage of you and throw you to basically to the desert to die. The penny, excuse me, the penny operating company is being sold to Simon Property Group and Brookfield Asset Management for cash and the assumption of debt. Penny will lease back the 160 stores and 6 distribution centers in what the U.S. bankruptcy judge calls David Jones referred to as one of the longest, most complex lease agreements known to man. So the reason I'm sharing this stuff is because, I'm not vested in JCPenney one way or the other, but I do think it highlights the pain of going through the bankruptcy, through Chapter 11, of a bunch of people kind of coming in. They're ripping everything apart of what makes sense, what doesn't make sense, what they want, they take, what they don't want, they sort of leave behind. It's kind of like, having a really, really, somebody breaking into a house, for example, right? And they trash up the place and they just take whatever they find valuable, and whatever they don't find valuable, they just toss around and leave. That's basically what happens in this particular case scenario. And where I think it's very, very important for you to understand is that this affects the people, right? And so I believe this is one of the big reasons why I believe you got to figure out, to invest. And the problem with the defined benefit and defined contribution, when it was defined benefit, the company was in charge of investing on behalf of you, so they could hire smart people who knew how to trade, who knew how to invest, who knew how to analyze things, and then they would go in and make those decisions for you. Amazing, right? But then we got into the defined contribution plan. However, our education of, do we know how to invest? Do we know how to evaluate things? Do we know what the hell we're even doing with this money, or how to best use it, or how to best leverage it, or don't leverage it? We were not taught that. We were just sort of left in the wild. Go into the woods, kids, and good luck, right? Without ever living in the woods or understanding. And we're like, what the hell do I do now? Is this edible? Is it not? Will that creature kill me, or will it avoid me? Do I stop, freeze, or run? I don't know. I've never been into the woods like this. It's the same stuff happens with the money for us. So then we go out there and we're sort of flailing things around, and then we put in money into these mutual funds, hoping and praying that they will do stuff. But the problem with mutual funds is, well, you only get 30% of what the mutual fund makes. How is that possible, Nev? Well, it goes through the fees. They fee you to death, and they don't seem large, but they fee you to death, so that's why you don't get a whole lot of money, right? So that's part of the problem, right? Now, you can get wealth managers and stuff, but typically they also fee you to death, and you better have substantial amount of money, or you can't even walk through their doors or afford them, right? So that's a really big thing, and you're also taking a risk, so they better, provide you with the returns that are way above the market, which very, very few people ever do. And then be prepared that you're not going to get 100% of that stuff, because they will take at least 20% from whatever, profits that they make. And to get involved with them, you have to pay them 2% fee of whatever money you put in. It's known as 2 and 20, and it's a standard thing for the operators or the producers or the syndicators or whatever the names they give themselves, that we all give ourselves, right? The fancy titles that honestly don't really mean much of anything. But, they mean sometimes to the people. So that's why I guess we use it. And so that's the piece that you need to understand. So your number one defense is education. Education, education, education. Go out there, learn as much as you possibly can. Speaking of education, speaking of things to potentially consider investing in this crazy, crazy, crazy world, Bitcoin. Let's talk about what is going on. Well, average transaction value increases 500% since July. This is amazing. All right. Average value of Bitcoin transaction has increased dramatically since July this year. Average transaction value was sitting at approximately $25,000 per transaction 4 months ago, but posted a yearly high on October 20th at $151,000 per transfer. This is an increase of more than 500%, and it's huge. Now, you might be thinking to yourself, like, wait, what does this actually mean? Well, it means that larger folks are moving in. Whereas before, it was you and I, trading in $100, $50, give me like, a Satoshi. Now we're having large institutions, whales, large money moving in. The surge in transaction value comes shortly after Bitcoin's trader dominance rose to levels not seen since 2017. This is incredibly bullish, and I'm going to show you the chart in a moment, but this is absolutely amazing and mind-blowing. The $151,000 average value is 190 times more than Ethereum's average transaction value of 793, suggesting a significantly greater institutional presence in the Bitcoin market. Number of daily Ethereum transactions increased by 30%, reaching a 2-year high of 1.29 million on August 10th. Over the same period, Bitcoin transaction consistently hovered between 300,000 and 350,000, suggesting the Ethereum ecosystem was primary magnet for new crypto users. Additionally, I would also add that this whole thing right over here that we just read about suggests that the Ethereum ecosystem is the primary magnet, not just for new crypto users, but for individuals and also for all of the different building blocks that are happening on it, because all of those things have to use Ethereum all the time. So it shows you that Ethereum is sort of this, the value in it, it's sort of like a business, that it's constantly being used up and going places, right? Which is super, super exciting. And it also shows you that this low and steady level of the transactions of Bitcoin shows that people do see it as a store of value. That is a big difference and something you should definitely consider. Figures show that institutional investors are starting to take notice as large investment firms like Grayscale and MicroStrategy increase their accumulation. By the end of September, Grayscale, get this, controlled at least 449,900 BTC, or 2.4% of the current supply of Bitcoin. They're basically 50,000 Bitcoin shy from 500,000, right? This is huge, absolutely huge. And why do they do that? Because they have that kind of money, y'all. This is the part that I kept saying, that, when they move in, right? Like, they don't come in and buy like a Bitcoin or a Satoshi. They go in and buy things like MicroStrategy buying 38,250 Bitcoin, or Jack Dorsey Square purchasing 4,709 Bitcoin. Do you see what I'm saying? Like, they're going and buying these things in hundreds and in thousands. And how are we being rewarded for that behavior? Well, here it is. The price move, holy mackerel, it was 12,200 a moment ago when we started the show. So I just refreshed this thing because I wanted to get the freshest price ever, but I had it sitting on this thing. When I went to the page, it was 12,200 and something dollars per Bitcoin. Now it's 12,408. Over the 7 days, Bitcoin is up 8.6%. It is up 4.5%. It is definitely behaving in an absolutely insane manner. We're going to take a look at the chart in a moment. I just want to see sort of the biggest gainers and losers. So Ampliford, biggest gainer, EGLD at 9%, Waves at 7.6%, and then it kind of goes up. And then Ample is up 13%. On the losing end, NMR is negative 7.7, XEM negative 6.1, KSM negative 5.3. So overall, not much of anything bad happening whatsoever. Ampliford is winning on the 7-day, and AR is losing big time on the 7-day component. Let's go and take a look at Bitcoin. Holy mackerel. This puppy is going up. Here is a 24-hour chart right over here. We're looking at it. As you can see, that basically from yesterday this time, right, we were at 11,800. And then, you know, it was kind of like going up, sort of sideways, came back down by 4 p.m. We were still at 11,844. Then it kind of went a little bit sideways again by 8 o'clock. New York time, we were at like 11.9. So again, not much happening. Then all of a sudden, boom, by what is this, like 2, 3 a.m.? Yeah, like shortly after midnight, I guess. Yeah, about 1 a.m. It was like 12,263, came back down around 4:30, 5 a.m. at 12.1, and then boom, just went on up. This is absolutely, look at this thing, how it's performing, and it's a beautiful, beautiful pattern. I do believe that this is very bullish when I'm looking at this pattern, because we have had this sideways trading here happening for a very, very long time, and the fact that it's not going straight up, that it's actually doing this sort of slow adoption thing, that is incredibly bullish. And I do see this being a very, very bullish pattern. And it looks like we have a high right over here of 12.9, right? Would that be an accurate thing? Yeah, 12.3, 12.4, whatever. It looks like we are breaking that right now, and that is incredibly, incredibly bullish. If it can break and if it can hold, then it will definitely go to the new highs. And here is the thing, if we look at the whole thing, look at this stuff, it's definitely broken out. Here it is. If it can actually hold over that stuff, there is no, hold on, let me see if you can see this. That is 11, 12, come on, I don't know if I can, I'm trying to do this. I'm going to have to look at the trading view and show you tomorrow. But you can see that there is no resistance between this and what we had, that $20,000 in late 2017. So is it possible that we're going to see 2017 highs in 2020? Yes, it's possible. Is it probable? I don't know, right? But it is 2020. Anything is possible. It is overall, when I look at this stuff, incredibly bullish trend. And this is absolutely incredible. Over the course of 1 year, Bitcoin is up almost 51.5%, and over the last 24 hours we're up 4.6%. And this is one of those things where I said, when something goes up 0.01%, I'm like, it didn't really do much of anything. So this is very exciting to me. As the price continues to goes up, as the more excitement goes in, more people will start jumping in. As more people start jumping in, the price will continue to rise. So you definitely want to pay attention to this stuff, and to do that, you definitely want to continue watching the channel. So you definitely want to come and join me live if you have a Q&A. Well, if you have, well, sometimes I need an A, and you have a Q and I have an A, right? So we'll exchange our Qs and A's live. So make sure you join me for that. Make sure you smash the like button immediately. Do subscribe, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.